everybody. It is lovely to see that there's this many people interested in coming out on a beautiful sunny Saturday afternoon to listen to a talk about tax policy. It's going to be a really important issue, this one, in the upcoming election, and so I'm glad that there's this level of interest, and I'm going to be interested to hear what you think about it as well. So, am I loud enough? Can people hear? Yes? Excellent. A little louder? All right, I can certainly project. Give me the high sign if it's not loud enough. So we're here to talk about income splitting. I'm going to devote the first part of the talk to the ranting and raving and trying to get to the bottom of that. And then the last part at, how you might think about this in relation to your own taxes or those of your friends, of your kids, whoever you might be thinking about today. And I'd like to suggest that while we're going through, if I'm not being clear, if you're not following me, please feel free to put your hand up at any time so we can do a quick clarification, okay? And then we'll leave some time at the end for more substantive discussion, questions. I'd like to hear your views as well and your thoughts. So let's get into it, shall we? So, I'm missing a slide. There we are. You all know that income splitting was one of the big promises that the Conservative Party made in the 2011 election, that they would bring this in after they balanced the budget. All right? It took a few years to work on reducing the deficit that was incurred with all the stimulus spending after the global financial crisis in 2008. And in fact, they couldn't quite wait until the budget was fully balanced. They went a little bit earlier and they announced last October for the 2014 taxation year a modified version of the original income splitting promise. So what's the gist of this? The government's news release really says it all. I'm just going to give you a moment to read that sentence from the news release. And it's all about doing something to change the relative tax burdens between two types of couples, right? Couples that have a single earner, and presumably the other member of the couple is staying home, caring for the young children, right? And on the other hand, the two-earner couple. It's all about changing the relative tax payable by those two couples. So why would that be an issue? This goes back to the roots of the Income Tax Act, okay? So the Federal Income Tax Act is coming up to a very significant birthday in 2 years. It's almost 100 years old. And way back in 1917, when the very first one was formed, two fundamentally important basic design decisions were made. One was that we would tax the individual as the basic unit of taxation. So each individual files a tax return and reports his or her income on that and claims his or her expenses. And contrast that with the system in the US, which allows married couples to file a single return. This is sometimes called joint taxation, in which they combine all of their income, all of their expenses on a single return and present it as one picture to the government to compute tax. So Canada went the individual unit. We also adopted a progressive rate structure. Okay, that's the graduated rates. You know what that means. It means that the rate of taxation rises as your income rises, right? And so, what does that look like? It's sometimes hard to remember what tax bracket you fall in, and I've rounded off here, okay? This is a simplified version. But really, for quite a few years, right, we've had 4 tax brackets. This is the rate structure has changed many, many times since 1917. But right now we've got 4 brackets, and you can see that income is divided up into chunks, right? So on your first $45,000 chunk of income, you pay a rate of 15% federally. Your next $45,000 chunk, the rate is 22%. The next $50,000 chunk, it goes up to 22%, and then anything over that's earned over $140,000 taxed at 29%. So that last sentence on the slide there gets at, what is income splitting? Effectively, it is shifting income that you earn into the hands of a family member with a lower tax bracket. Okay? So you're not changing the overall income of the household, but you're putting it into the hands of a relative who is taxed at a lower rate, therefore reducing the overall tax burden on the household. Okay? So I'm thinking probably everybody understands that there's no one who pays tax at 29% on all of their income, right? That's not how it works. So this scale applies to everybody. So if you're earning in that top bracket, if you're earning $150,000 or $200,000, your first $45,000 is still taxed at 15%, okay? And then you move up the scale as your income grows. Okay? Are we good with that? Yes, at the back.
Each chunk is taxed separately.
That's right. Exactly. Each chunk is taxed separately. That's a good way to put it. Okay, so we'll keep going. So is it possible to split? Is it easy to split income? Can you only do it with this new family tax cut? Well, no, actually there's quite a few ways to split income. Income splitting is big business in the tax planning community. And there are many well-known, long-standing ways of achieving this. It tends to be easier if you've got business or investment income, okay? And you can note at the bottom of the slide again, the hitch is that all of these techniques for income splitting involve giving income away to your family member, okay? They all involve actual transfer of ownership over some income or some property, okay? So let me talk a bit about what these techniques are. I've just got a few of the major ones here. One of the most common is hiring a family member to provide a service to your business and paying them a wage, okay? Now, the wage has to be reasonable in relation to the service they're providing. There has to be some reality to the arrangement, but this is a very common and fully legitimate way of splitting income. The wage is deducted from the business owner's income, and it's included instead in the family member's income who's providing the services. And if they're taxed at a lower rate, you've achieved income splitting. Okay? So a less well-known way is if you've got two earners in the household and say one is the primary earner and one has a much lower modest income, okay? It's tempting to think of that lower modest income as some extra money that can be used for extra household items, extra items for children, for holidays or whatever. But really, if you're interested in income splitting and you have the means, the smart thing to do is to have that lower earner save every penny of their income and invest that in some kind of income generating asset, right? Let's say a bond that generates interest. Because all of the interest on that bond will be taxed in the hands of the lower income family member at their lower tax rate, okay? So it makes more sense to spend the primary earner's income and to save the lower earner's income. Okay, so another method of income splitting. There are several ways that are expressly permitted and sanctioned by the Income Tax Act. Okay, there are these registered deferred income plans that allow for income splitting. So most people have heard of a registered retirement savings plan, an RRSP. If you have any earnings from employment or business, you have RRSP room. You can contribute to an RRSP, right? You can get a deduction for making that contribution. You can also, if you have a spouse that does not have his or her own income, you can create a spousal RSP and use your contribution room to build up their spousal RSP. Those funds belong to the spouse, okay? When they're withdrawn from the RSP by the spouse, they're taxed in the spouse's hands at the spouse's tax rate. So what have you achieved? It's effectively income splitting. Same with the tax-free savings account. I'm not sure how well known this is, but each individual has about $5,000 of room to contribute to a tax-free savings account. This is a fairly new innovation. It's now $5,500, correct? Yes, thank you. Okay, so you do know about that. Great. I'm wondering if you also know that it's possible to double your contribution room in a year by creating a TFSA for your spouse. Again, if you have the means, right, and if you're fortunate enough to have $11,000 to contribute in a year, you can put $5,500 in your own and $5,500 in that of a spouse. Again, you're giving the money away to the spouse, and that spouse can then withdraw those funds tax-free. Same with a registered education savings plan, okay? It's essentially an income splitting vehicle. You put money in there, you don't get a deduction when you put it in. You put money in there, it can accumulate investment income, right, interest and so forth, without paying tax while the money's in the plan, so it's tax deferred. And then when it's paid out, it's paid to the child, right, and it's taxed at the child's rate, which usually, if they're going to post-secondary, is not the highest tax rate. And so there's an income splitting effect that is achieved through the RESP. So this is, permitted by it's encouraged, in fact, by the Income Tax Act. There are tax benefits that are put right in there. And then as we move up the kind of sophistication scale, the wealth scale, if you have a family corporation, okay, it's also possible to issue special class shares, right? You can create a separate class of shares for family members who have no other source of income. The board of directors of the corporation can declare dividends on that special class of shares and have those funds taxed in the hands of the family members, okay? And the Supreme Court of Canada has said that that is permitted. That is an effective way to arrange your affairs to reduce the household tax burden. Okay? So all of those can be done. There's yet more ways that I could tell you about. They all require giving money away to the family member. Okay? So what about those who just have employment income? Regular working folks who have a salary or wages. They may not be able to save enough to have significant financial assets, but they're earning money on a yearly basis. Can you split that kind of income? It's a lot harder to do that, okay? Oh, I keep skipping slides. Much, much more difficult, okay? And so one of the things that the family tax cut allows is something called notional, well, I refer to it as notional income splitting, okay? The ability to do it just on paper. Okay, so it's hard to give your right to employment income away. You can't tell your employer, pay my spouse instead, pay my child instead. They have a lower tax bracket, I'd rather they get the money. Okay, it's not permitted by the Income Tax Act. You wouldn't succeed in splitting income in that way. People have tried different kind of fancy ways to do it, it doesn't work. All right, so the family tax cut does allow sharing on paper, okay? So I know this slide has numbers on it, and therefore it's unpleasant. However, we're going to make this as easy as possible, all right? So, yes, I missed one again, all right. So I want us to set up this very simple example of a red household and a blue household, okay? And both of these households have a total, amongst all the people in there, they have a total of $95,000 of annual income, okay? I chose $95,000 because Statistics Canada tells me that the latest figures for 2011, that was the average family income for households of 2 or more people in 2011. Okay? So we know that even though these two households earn the same amount in total, tax is determined individually, right? We have this individual tax unit. So each member of the household files a separate tax return. And so that income is then taxed in the individual at the progressive rates. And so the total tax burden for each household depends on how the income is divided between the two adult members of the household. Right? So in the red household, all the earnings are in the hands of one family member, right? And you can see the first chunk is taxed at $15,000. The next $45,000 chunk is taxed at 22%, right? And then just $5,000 gets into the 26% tax bracket. And you see the final figure at the bottom there. Okay, in the blue household, if you have two people sharing the earnings, right? So they're both out in the workforce, each is earning $47,500. And you can see that there's a splitting effect, right? Because more of the household income is taxed at those lower rates, right? More of it is taxed at the 15% rate because they can each have the benefit of the 15% rate on their first $45,000. And then they've just got a little bit of income that gets into the second bracket, but they don't even get close to the third bracket. And so as a result, the total tax amount is less. Now this is really oversimplified. Okay, there's all kinds of wrinkles that could change the numbers. There's going to be credits that they're going to claim for one thing. So this is not realistic in terms of how the tax calculation would look, but it captures just the mechanism of income splitting. Are there any people okay with this example? Any questions about the example? Yes?
Does that only apply to employment income, or would dividend income also apply?
For this example, any kind of, it doesn't matter what the income source is. Yeah. Things like dividend income benefit from special credits and so forth. So again, the real details would look different, but the principle, right, the basic mechanism of the splitting effect works for any kind of income. That rate structure of the 4 brackets applies to all kinds of income. Yes?
If you take the provincial tax into account, what would the difference be?
Right. Well, it would really just accentuate the difference because the provincial tax layers on top of the federal tax. The brackets are a little different, the rates are a little different, so again, you know, the details would look a little messier, but it certainly wouldn't take away the splitting effect because in Ontario, the province also has a graduated rate scale. So you have the same issue at the provincial level. We have only one province in Canada right now that has a flat tax, and that's Alberta. So they have there's a sort of a basic exemption amount, and then they've got a flat rate above that. But across the provinces, everyone's also subject to the federal tax. So this is a pan-Canadian issue, regardless of what province you're living in. Yeah.
This notional is like a prenup for you. And what is the percentage of federal tax applied index the I was just wondering, how much of, like, is it 80-20 or
No, it's about a third.
1/3?
Yeah, yeah, it's about a third,
This goes to the feds,
approximately. That's right, approximately. That's right, yeah. Okay, let's move on. So what is it that this family tax cut does? Well, it basically allows the red household to get the benefit of the splitting effect. Even though all the income in the red household is earned in the hands of one family member, all right, they can notionally, on paper, move half of their income, up to $50,000, over to their spouse who is not earning his or her own income, and achieve the same tax results as the blue household. Okay, that's effectively how it works. So you move the income over, you recalculate your taxes, and then there's a tax reduction for the household of up to $2,000. And one of the ways in which the family tax cut changed the original income splitting proposal is that the benefit was capped at a $2,000 tax saving per household maximum. Okay, under the original proposal, the benefit could have been much higher. All right, so this, doesn't look outrageous. Doesn't look, completely, illogical. And so what exactly are people getting so exercised about? When you get into the details, there are a number of issues. And so I wanted to just, how many people have seen the Rick Mercer rant on income splitting? Oh, good. Not too many people have seen it. You'll enjoy this. You'll enjoy this.
Hats off to Jim Flaherty. Canada's finance minister has left the building after 8 years on the job, and I, for one, I'm going to miss the guy, because no matter what you think of Jim Flaherty, I can say this. He was never afraid to speak his own mind, which is why, on the way out the door, he made it pretty clear that the government's plan for income splitting is a bad idea. Now this was a bombshell in Tory circles, because income splitting is the biggest promise that Stephen Harper made in the last election. And on paper, it looks great. I mean, the government is going to take $3 billion that hardworking Canadians paid in taxes and just give it back. What's not to like? Well, the problem is in the fine print. And Jim Flaherty, see, he saw the fine print. Turns out the vast majority of Canadians, 85%, will not see a dime. Although we're all going to have to pay for the TV commercials telling us how great it is. Income splitting is a massive tax break, no doubt about it. Problem is, the people who will benefit the most are married couples with young children where one parent makes a lot of money and the other parent stays at home. Someone like, I don't know, who would be the poster child, the poster boy for this tax break? It would be Stephen Harper. There you go. He's an average Canadian. He has a big job, makes a lot of money. His wife volunteers. He has lovely children. God bless him, he deserves a raise. And with this tax break, he's going to give himself one. Now, who's not going to see any money? That would be everyone else. Those couples where both work like dogs, but neither are rich, single dads, single moms. Sorry, no breaks for you. Stephen Harper has said that this is an excellent tax break designed to help Canadian families. Well, I can't believe this needs to be said in 2014, Prime Minister, but families, they come in all different shapes and sizes. And here's an idea. If you're going to give out a tax cut, how about giving one to all Canadians, not just Canadians that look like you?
Okay, so in fine style, I think Rick Mercer really got the attention of a lot of people. His rant came after a couple of think tanks had put out reports starting to raise some real, dig down into the numbers and raise some real issues with income splitting. And so I wanted to just, get a little bit more wonky now, and let's just walk through some of the major objections that these think tanks, academics, public policy commentators have raised. And I have to make full disclosure here. I have been a critic of income splitting. I'm not keen on this policy. I like to think of myself as open-minded and always, ready to hear a new perspective that might change my thinking. But I think it's only fair to say I would be on the anti-side if you ask me right now. All right, so what are the main objections people have raised? First of all, they've said it's really based on a faulty comparison. So those two households, the red and the blue, if you look only at their federal tax burden or their provincial tax burden and the splitting effect, it does look unequal between them. But what you're missing is the bigger picture of their full financial circumstances. If you've got one person in the workforce paid and one person working at home taking care of children, you have somebody available to provide really valuable goods and services to the family. okay? And you can tell that because if you look at the blue household where there's 2 people working full-time, you've got them paying a lot of additional money for services they can't provide to themselves. The big one is childcare, if we're talking about young families, right? We know can be very costly. But there's also things like the cost of additional household services, convenience foods, the cost of 2 people commuting to work, the cost of 2 people paying payroll taxes on their wages. Okay, and so those who have taken a more holistic look at the financial circumstances of the 1-earner and the 2-earner household will say, you know, the 1-earner household's actually doing just fine, right? They're not really as hard done by as it looks when you just look at their relative tax burdens. Okay, the second concern is that income splitting creates vertical inequity between families, all right? So in other words, it's the higher income households that are going to benefit the most, right? Because if you think about who's really going to benefit a lot from income splitting, it's those paying tax at the top tax rate, right, who can shift it down to somebody paying tax at a lower bracket. And so we're talking about the highest income households receiving the biggest benefits, okay? Even if you have 2 red households where you've got a single earner supporting a stay-at-home spouse, right? The single earner with the higher income will benefit more than the single earner with the lower income. Now, if the purpose is to let people more easily make the choice to have one person at home, how does it make sense, right, to give more money to the household that's already better off? This is the concern that critics have raised that I'm capturing with the words vertical inequity. The third item, discouraging labor market participation, especially among women. Okay, so this has been raised by a number of different stakeholder groups. People concerned with gender equality for sure. Also economists. For economists, this is their main quibble with income splitting, is that you make it more expensive to make the choice to re-enter paid labor or to increase your paid labor if you're the secondary earner. It increases the tax rate on secondary earnings, okay? And so there have been actually quite a lot of empirical studies. Because we have the US to the south of us that already has joint taxation, you've got a kind of laboratory where you can look at, you know, what are the impacts to, you know, moving to joint taxation. And people have made the case that they can see that there is a discouraging effect on labor market participation. Fourthly, increasing inequality within households. Okay, here is where the concerns about gender equality seem to come to the fore. All right, if you're incentivizing a household organization in which more earnings are concentrated in the hands of one of the household members, all right, do you in a way, you know, move society towards a system where there is greater inequality between men and women within the family? Okay. So this is, you know, obviously controversial. High cost. Rick Mercer mentioned $3 billion. Okay, the family tax cut, the modified version, it's been estimated the cost is about $2 billion, but still these are big orders of magnitude. Sheena, oh, thank you. Okay, great. So I'm getting close to when I want to stop speaking, so I'll move it a little quicker. And then finally, connected to that high cost, objectives, if these are the objectives to help, you know, young families, there's lots of ways we could do that better. If people are interested in some of the alternate proposals that have been made, I can get into that later on. Yes?
Has anyone done an analysis of whether or not the income splitting can be offset by the deduction by a single earner having a spouse who's not an earner? In other words, there's a spousal deduction that one can
Yes.
claim.
Yes.
Has an analysis been done as to which benefits more?
Oh, the income splitting benefits more. It's over and above the level of the spousal credit.
But
Yeah.
once you split, you can't have the credit.
Oh, no, you still can't have the credit. Yeah. I think we better come back to that. Okay, great. Thank you. Thanks for the question, though. All right, so those are the kind of economic and social policy arguments that I just went through, but you know, does it really fully account for the amount of heat that has surrounded this debate? I don't really think so. I think the reason it gets so passionate, this debate, is more about the cultural meaning of family and the struggle that's going on at that level, right? We're putting the state inside the family rooms of the nation, right? Talking about attaching monetary value to certain kinds of family values, right? Of attaching money impacts to people's choices about gender roles, about parenting, whether to take care of their own kids or have their kids in a daycare, It's also treating the family more as a unit, right? Assuming that everybody's pooling their income and sharing their income and doing everything together as a unit, and kind of putting in the background the individual interests of family members. So I think the way we can really see this is through the pictures, okay? The numbers tell one story, the pictures tell, I think, a deeper story about why this seems to really resonate and generate strong opinions. And so let's look at a few pictures. This is my favorite one. The Broadband Institute, it's a left-leaning think tank, it's very opposed to income splitting. They've started this campaign about the Mad Men giveaway, all right? So they're referring to, Mad Men is a TV show set in the early 1960s. They're really making the point that, you know, we're turning the clock back here to an earlier and out-of-date version of what constitutes, you know, the kinds of family relations that we expect. The government of Canada has countered, very attuned to this debate, right? And has countered with its own imagery. And here we have mom coming home in the suit, obviously having just finished at the workplace, coming home. Dad is having the tea party with the daughters. Dad is a little bit ambiguous because he has a shirt on, a button shirt, right? But if you look closely, it's kind of undone at the cuffs and he's got a t-shirt underneath. So he's a bit more ambiguous as to whether he's come from the office or if he's been at home all day. And the point they're making is that, look, folks, this is gender neutral. This can accommodate changes in the way families run these days. And that where you have women who have professional careers or the full-time earners, it can be equally beneficial, okay? Now, we know that that's still a small minority of situations, but there's something about this picture which is very true, which is that income splitting is beneficial where you have a sharp division of roles, okay, within the household, okay? And so another think tank, the Canadian Centre for Policy Alternatives, has recently come out with this image. So as contrasted with the sharp division of roles between parents in a household, this one, their report is talking about balancing work and family so that all individuals can have the opportunity to be employed while also having, you know, a reasonable amount of support to meet their family responsibilities, okay? Oh, and I wanted to show you one last website, which is the Conservative Party of Canada. And they recently have, when the family tax cut was announced, again, they're obviously listening very carefully to what people's concerns are. And what they've presented is, we understand that families come in different shapes and sizes, okay, and different forms. And the final package that was announced, they assert, has benefits for everyone, okay? Now, whereas we might have assumed under the original proposal that the single income couple would do best, okay? That's the red household, the classic, right? In fact, if you look at the examples, if you click on these different pictures and look at the examples they've chosen, they have the two uneven incomes doing best. So the full-timer and the part-time worker who's also spending more time at home. And so I wonder whether this is, you know, in a way responding to some of the concerns about how this will impact and what vision of family is being promoted. Okay, so this tells us something really important about tax law generally, I think, right? It's not just about shifting money around. Tax law also conveys cultural messages, right, about desirable behaviors and attitudes and activities, all right? So this is why I think it's become such a central part of political platforms during elections and why it will be in the election coming up. It's also why I think it's really important that we strive for tax literacy, okay? It's a really defining feature of our public policy. And again, this is why it thrills me when people would want to come and talk about it on a Saturday afternoon. So I don't want to talk for too much longer, but I did want to say a bit about how you figure out whether this could be a benefit to you or to someone that you care about. And it's tremendously complicated in the way it's been implemented. One of the criticisms that have come out is that it's going to complicate the tax return a lot. Nonetheless, I think that we can boil it down into 3 basic steps, okay, to figure out if or how much you can benefit. The first is, do you qualify to participate at all based on your household composition? The second is, if you're in that, you know, that eligible group of households, what's the differential between your incomes, right? Does it put you in the ballpark of maybe benefiting? And then finally, if you are, how much tax could you actually save? Okay, so going to step 1, the yes group is easy to absorb, right? It's couples living together with at least one child under 18 all year long, okay? All the others are not eligible, right? So there's not much point in worrying too much about it or going through the calculation. Step 2, this is simplified, okay? I'll give you a minute to absorb it, but really what you need to figure out is what is the tax bracket of the highest earner in the household? Okay, that's where you start. That's why this third column here, I've got higher income spouse. If the higher earner is in the first tax bracket, there's almost certainly no benefit at all to income splitting, okay? All right, because you don't have that gap between the tax rates. That's what you need to find to get the splitting effect. So again, the higher you move up the income scale, the greater the chances are that you can benefit, but it depends entirely on the income of the lower income spouse. So even in the very top bracket, right, if your spouse is in the same bracket, there's no benefit. Okay? So notice that within, say, the second bracket or the third bracket, there's quite a spread of income there, right? But even if you've got somebody earning $90,000 and someone earning $45,000, their incomes are different, but they're in the same bracket. They're both in the 22% bracket. So they're not really going to be able to get too much benefit out of income splitting. So this is the kind of assessment that you would need to do. And then if you think you're going to benefit, okay, then there's a more complicated series of steps. Okay? I don't know if it's worth walking through this. I'm happy to do so if people want. There's a special schedule that Revenue Canada has kindly come up with. And I would encourage you, if you do want to look at this more closely before tax time or at tax time, all you have to do is Google CRA, Canada Revenue Agency, family tax cut. Okay? And you'll come up to a link that will bring you to, oh, does it not want to open for me? Oh, there it is. The special schedule. That looks familiar, I'm sure. Kind of, you know, maybe not welcome, but familiar. And you can see that what you're effectively doing is both spouses have to complete their return as they would have in the past without regard to the family tax cut. That's the first step, right? And then you compare your tax payable, or I'm sorry, what you do is you take your federal tax payable and you add it together, right? So what you would pay together as a household without regard to any family tax cut, right? You then go back and do a notional calculation. You say, well, what are the two net incomes of the two spouses, all right? And you look at what's the difference between them. Okay, let's say there's a $50,000 difference between their net incomes. You're going to divide that in half. Okay, so now you're down to $25,000. You're going to deduct that from the income of the higher income spouse and add it to the net income of the lower income spouse. This is all notional, just on paper. Okay, and then you're going to redo their taxes. Right, you're going to apply the tax rates, claim all the credits, and so forth. This may help to answer your question. And work out, well, what's the difference, right? How much tax can they save as a couple compared to what they would pay without the family tax cut? And if there is a difference, then you can claim that difference as a tax credit up to a maximum of $2,000. Okay? So, yes, I'm going to take questions in just a moment. But let me just conclude, because people may be getting tired of this debate. You may be getting tired of this talk, but you may be getting tired of hearing about income splitting in the news all the time. Yet another report. Is it going to end soon? I don't think so. In fact, this debate has been going on ever since we adopted the first federal income tax. Okay? Because we had the comparison of the US right next door. We've had major flare-ups of debate, royal commissions and so forth in the late 1960s, again in the mid-1990s. And now we've got the current debate going on. Okay, the family tax cut is the first major shift in the direction of US-style joint taxation, but it's nowhere close to full joint taxation. Right? So if the family tax cut is implemented, I think what we'll hear is continued advocacy by some that we move further in the direction of US joint taxation. Right? It will not stop there. If it's not adopted, or if the government changes, for instance, and it's repealed, we'll continue to have those who feel that it's, you know, that they would prefer to see a tax system that, you know, gives more advantages to a stay-at-home parent. I'm very encouraged about the tax literacy of the Canadian population after spending some time with you folks. So I think we're probably getting close to the end of time. Thank you so much for coming and for your careful attention and for being just a wonderful group to spend an hour and a half with on Saturday.